Hey guys, hopefully everyone is doing well. Our today's target is to understand basic accounting. Accounting is a word which is basically a subject which will teach you how to record your transactions. So what I have said, record of transactions. And here the word transaction is also important. So you may consider in a very simple manner give and take of any commodity is called a transaction. What could be the example of transaction? Let's say you want to buy a watch. So what you will do, you will pay cash and in exchange you will get the watch. So what is happening? You are paying something and in return you are getting something. This would be called transaction. And this transaction, how to record is basically the purpose of accounting. Now consider yourself that you are a businessman and you are trading, buying one commodity from a source, storing it, keeping it, changing it, packaging it, and turning it to a valuable packaged commodity or goods, and then you sell this commodity at a little higher price. Once again, I'm telling you the same thing. You are buying a simple commodity. Say the price of that commodity is 10. This would be considered the cost of that commodity, that what you have said it is 10. Then you start processing it. You can make it new package, new packing. So some expenses you will be making upon this commodity. Let's say the amount of expense is 2. Finally, what you will do after packaging or after turning this simple commodity into a packaged valuable commodity, you will sell it in the market and say the price of that commodity you have fixed as 20 rupees. So what had happened? 10 rupees was the cost of purchase. You wanted to add some value. For that you have made some expense, so total cost is to be considered as 12. Can you understand the point? 10 was the purchase price of material, that may be a shirt, that may be furniture, that may be computer, that may be laptop, and then you have started some process to add value in this product. We are taking an example. Say the expense of this value addition is 2. So total cost would be considered as 12. Here you may write it. So what we have decided, total cost was 12. And you have sold this commodity for rupees 20. So what had happened? You have got a profit of rupees 8. This is a very simple procedure of trading. You are buying something, adding value, and then selling this commodity at a little higher price. The difference between your sale and cost would be considered your profit. So this would be a combination of different transactions. What we have seen over here, you have bought, it's a transaction. Then you have made some expenses, it's a transaction. Then you have sold this commodity, it is again indeed a transaction. Now with the help of accounting you will be able to learn how to record when you have made a transaction to purchase that commodity, then how you will record a transaction when you have made some expenses, and how you will record the transaction when you have sold that commodity, and how you will record a transaction where you have got the profit of 8 rupees in this example. I'm sure that you people have understood our target, what we will achieve in this particular lecture or in this session, where we will have different transactions, we will learn how to record, and final target is to see how much profit this business is earning, or maybe how much loss this business is earning, and we will create. All right. So let's assume some transactions. We are talking about your business. You are a trader. You are buying commodities, processing and adding some value. Then you are selling these commodities on profit. Suppose the very first thing you have invested, you are the owner, invested 5 lakh dollars, pounds, rupees, whatever the currency you want to have. So invested 500,000 in business. It means total equity you do have is 500,000, 5 lakh rupees you have invested in your business. Okay, I was actually going to change its font a little more readable, and let's change the size as well. Let's make it 40. Alright guys, now the first step you have seen, we have invested some amount in our business. With that, what you have done, bought an office building. Say the amount of that office building you have spent to purchase 50,000 rupees or dollars. Okay, why not we should write over here. You may consider it that we are following dollars. So with $500,000, you have started a business. After that, you have bought an office building for $50,000. Again, we are putting, and again at third position, you have purchased, or better word is again to use bought, a packaging machine, and for that you have spent $4,000. Right now we are just in a position to start our business where we have invested some amount and important assets we have bought. We needed an office building where we will be having our office as well. We are going to make some packaging work in the same building as well. Out of 5 lakh rupees, 54,000 have been spent. Then what you will do, you will go to the market and will purchase your business commodities. Purchased business commodities. Why I'm not writing the name, it depends upon your business. Suppose you are doing your business for furniture, for computers, for laptops, for garments, what kind of business it is, it depends upon you. And simply what you will do, here you will write the name of those commodities. Let's say garments are your business commodities and you have bought them. Now please understand, here we are using bought, purchased. In all these three entries we are making a transaction, but these transactions by nature are different. Here, when you will be buying an office building, that office building is not for resale purpose. Although you can say, but office building was not bought for resale purpose, and then when you have bought a packaging machine, that was also not for resale purpose. But when you have bought these garments are for resale purpose. It means these are goods, commodities, and merchandises. Why we are calling it goods, commodities, or merchandises? Because you have bought them not to keep them for a longer period of time. You have bought these commodities for resale purpose. It means you will buy, will repack them, will add some value in these commodities, and after adding value, you will sell them. So up till now, we are creating a business transaction network where the next step is to make some expenses. Let's say you have paid carriage on goods purchased. Here what you have done, you have bought these commodities from main market or wholesale market. To bring these commodities to your office, you have paid some carriage. So let's see how much amount you have spent to purchase your commodities. Let's say $10,000 you have spent to purchase the commodities. Then how much carriage you have paid? Let's say the amount of carriage is $100. So guys, you are understanding what we are doing. And now suppose after 1 month you are making these transactions to be recorded in accounting or in your books. After a month, when it would be passed, it may be possible you will be paying electricity bill is paid for, let's say, the dollar amount 20. Beside this, you have paid some sort of tax. It may be salary, it may be tax. We are actually wanting to create some expense scheduled. And you, at this stage, let's say there was a guard or there was a clerk, there may be a computer operator, there may be a cashier, any employee you can assume, and we have paid salaries. So salaries paid to a clerk who is making these transactions. Alright guys, now you were having 5 lakh rupees, office building was purchased, packaging machine was purchased, you have bought these commodities, some expenses you have made, and some extra expenses were also made. After that, you had processed them, new packaging, you have spent some money upon the packaging, and we are going to write these packaging expenses over here. What you have done? Packaging charges for each of your product, suppose $40 total amount you have spent upon packaging. Okay guys, and the amount of salary we can also suppose $10 you have paid for your salaries to clerk. In this way, there will be a stage that would come over here. You have sold these commodities or goods for rupees, let's say total commodities we have bought for $10,000, and we have sold these commodities for $25,000. Now here please understand, we have supposed that all of these commodities have been sold out. It may be possible you have sold half of the commodities. It may be possible you have sold one-fourth of the commodities. Uh, that would not make any difference. So you can write exact sale after a month. Alright guys, so here what we have done, we have sold these commodities and received cash. Sold commodities, and after that you have received the cash, and you may mention for cash. And after selling these commodities, there is also possible you have sold commodities on credit as well for, oh, we have written rupees for, suppose, $1,000 as well, but these commodities you have sold on credit. Please understand, total cost of these commodities 10,000. Initially we said all of the commodities were sold for 25,000, but it may be possible some of the commodities were sold on credit. That is why I have added an additional entry, an additional transaction, so that those people who will sell their commodities for credit, or they are not receiving cash on spot, they can have the help as well. So here we are at the position where we have invested some amount, assets were purchased, business commodities were purchased, some expenses you have made, and now you have sold these commodities. So this is a very simple scenario of a trader who buys commodities at one side, then process them or change the packaging, and after adding some value, sell these commodities to someone else and gets profit. In this business, how accounting would be helpful and how we can record these transactions in under the principles of accounting, and how quickly we can calculate our profit or loss. So it would have three stages. It would have three stages. Actually, they are just two. But for you who are the beginners, these are three stages. Very first thing, you will record these transaction, whether which is going out and what is coming in, which we have discussed earlier. When we were defining any transaction, it was give and take. The very first step, you just note it down what is coming in your business and what is going out of your business. For that, we will divide whole accounting system into two parts. At this stage, we will go and divide it into two parts. You have seen that I have divided this whole process into two parts. At this stage, you may write your headings. For that purpose, I will arrange some more columns. Okay. Now, have you seen that you have divided your accounting structure into two parts? For beginner, this is the very first element and factor where you will record these transactions. I am sure that you people are greatly understanding how we will record these transactions. Right now, I am just letting you know how to make the performa for the first book where we will record these transactions. Okay, Now you can see that we have several rows with different structures. This first structure, you will name it as accounting equation. We are naming it accounting equation, where we will see that commodities which are coming in, what is the value of these commodities, and in return, what is going out. So please understand, there can be only two types of things. First, you may see assets, and secondly, you may see liabilities. Assets are basically the favorable elements of the business. Understand the meaning? Assets are basically the favorable elements of the business. Liabilities are basically unwanted elements of the business or unfavorable things. I will give you an example. If you have bought a binding machine or packaging machine in our transactions, you have seen bought packaging machine. It means this packaging machine is favorable for you. It would give a lot of benefits in the business, and since it is favorable, this packaging machine would be considered as your favorable element, and that would be your asset. On the other hand, last transaction, and we have not bought any commodity on credit, so let's add few things over here. Purchased commodities for cash and on credit for $500. So in this way, what is happening when you will buy these commodities for cash, you will not be having any botheration. But when you have bought these commodities on credit, please understand, that would become a loan, and that would not be in favor of the business because it's a burden. Although it has several benefits, when we will be making any credit transaction, it is not, please do not understand it as a worst thing. Credit transactions are also fruitful, are also beneficial, but by nature they are burden. When you have purchased these commodities on credit, you have to pay in future, so it's a kind of burden. So we will consider them unfavorable thing. So it would become your liability, because liability means responsibility, financial responsibility. In future, you are liable. You are responsible to pay the amount to a person from whom you have bought these commodities on credit. Alright guys, this was the brief introduction of accounting equation. Accounting is a subject which will tell you how to record the transaction, and this is the first performer, first format where you can record all transactions of your business, where you can tally the amounts as well. Okay, now we will be recording first transaction, invested $5 lakh in the business. It means cash is coming in, cash is your favorable thing. So here you will write cash. Now at this stage, you are very much requested to please be focused. What is happening? Look, invested 5 lakh rupees in the business. Cash is coming in business. You are the owner of the business. And here there is a twist. You are owner of the business, but these accounts would not be made personally for you. whenever you will record your transaction for the for the business, you will not consider yourself as the focal point. Focal point would be the business. For example, when you have paid 5 lakh dollar into your business, cash is going out. You are paying cash in the business. That means cash is going out personally. But when you will be focusing upon business, cash is coming in. So I'm sure that you people are understanding this twist, and this is the most important part. If you are owner of the business, please consider you will not be understanding these transactions according to your personal behavior. You will understand it according to business perspective. I have given you example. When you are paying cash, cash is going out, but when you will see this transaction in business perspective, cash is not going out, cash is coming in. So for this, what does we mean is 5 lakh dollar cash has been increased. When you are not putting any sign with it, it means plus sign. So cash has been increased. This accounting equation, I'm again telling you that it is according to business perspective. It's not owner's perspective. So now what is happening? When cash is invested in the business for business, although in one hand, in one side, cash is coming in, that's a favorable thing, but business will have to be answerable for this amount. So at the same time, it would be considered as the capital. Capital is the amount which is provided by proprietor of the business, and it is burden for the business as well, because business is liable to give proper accountability for this 5 lakh rupees. So 5 lakh is a burden for business as well. In this way, this first transaction we have completed. Each of these transactions, what I have said, give and take. That means something would be coming in and in return something would be going out. And here in business, cash is coming in and a burden is being created. That would be considered your liability. Once again, I'm telling you why it is burden, because we are understanding this transaction according to business perspective. For business perspective, business is liable to answer about this amount to the owner of the business. First transaction is complete. Now we will see our second transaction where we have bought an office building for $50,000. And since the nature is different, this is not for resale purpose. Office building is favorable for you and that has some benefit. So here you will introduce a new column where you will tell in second transaction that building is coming in your business for $50,000, and okay, $50,000 you have purchased the building. All right, what will happen? What would be the second effect? What would be the, as I have told you, if something is coming in return, something will be going out. That's a transaction. So when you will purchase building, in response, cash will go out. So you will put sign of minus and obviously 50,000 will go out. So what we are doing, we are making different transaction and going to record each of this transaction under the principles of accounting. All right, now two transactions we have completed, after which now the third transaction, why its position has been changed, we have centralized. All right, let's make these transactions if they are if they can be settled. Let's do it as well. Okay, anyhow, we will see them later on. Since we have centralized everything, that is why these entries are little bit different. Here what is happening? Okay, this was number 4 and we need to, okay, this was little, it had come back. Alright guys, now let's see how many transactions we have made. 2. Here you can put your second entry, and now we will see our third entry. Bought packaging machine. Just like building, we have bought the machine for business. What is happening? A new favorable thing, that means a machine is coming in the business. And now let's see how much amount of this packaging machine is. $4,000. Okay, and then obviously when you will buy a machine is coming in, cash will go out, that is why you will put sign of minus. 3 transactions we have entered, and now we will be focusing upon our 4 transactions. Number 4 is saying purchase business commodities. These commodities, although by nature are different from office building and packaging machine. And what is the difference? Building and machine was purchased not for resale purpose, and these business commodities are purchased for sale purpose. Look at here, for sale purpose. So by nature they are different, but actually transaction is same. Here commodities or goods you may write, or stock it can also be written. So in this transaction what we are doing, we have bought commodities for $10,000. Here goods of worth of $10,000 are coming in. Okay, we need to choose right line. So what we are saying, goods of worth rupees $10,000 we have bought. Again what will happen? Cash will go out, $10,000. Again this transaction is also completed. Now 5th transaction, carriage paid on goods purchased. Okay, here is a twist and you are needed to be focused how to record such expenses. When you will pay this expense, who is actually responsible for payment of any expense in the business? Your answer would be that owner is responsible to pay the expenses. So here what had happened in our entry, when you are paying carriage, $100 would go out, that is why you have put the sign of 100, and you will come to here. Capital was the amount which is invested by owner of the business, and that was 5 lakh. Since owner is responsible to pay all the expenses of the business, since profit, he has the right to get 100% profit in his pocket, that is why all expenses would be beared by the owner of the business as well. So what we will say, at the start his capital was 5 lakh, but since we have paid 100 rupees out of his capital, so you will subtract 100 from his capital. So his capital would not be considered as 5 lakh. Instead of that, we will subtract 100. This was transaction number 5, and now we will be looking forward for 6th transaction. Okay, now see, electricity bill is being paid for rupees 20. If electricity bill is paid, again the same thing we are going to do. Okay, let me put a separator again because we have multiple transactions right now. For that we need a little bit more space. Okay, sixth transaction was saying electricity bill. The owner had paid electricity bill. It means again cash will go out minus $20. You will put, and this was responsibility of owner. His capital would be decreased. Same what we have done in fifth entry. Now we will see what seventh entry is saying to us. We have paid packaging charges just like, no, seventh entry. Salary is paid. When you have paid your salary to the clerk, obviously it is a responsibility for the owner. Salaries you have paid is $10. There would be a decrease in cash. Since it is responsibility of owner, his capital would be decreased. And after that, what we are getting, number 8, and again we have made an expense, one of the same thing, packaging charges. Amount of these charges, packaging charges, minus $40. That means cash is going out, and since it is also the responsibility of owner, you will subtract $40 from owner's account. That is called capital. Now we will see 9. Sold commodities for rupees 20,000, 25,000 for cash. So one favorable element had come. This was your cash. It means when you will sell these commodities, look what we are doing, selling these commodities for 25,000. It means 25,000 is coming in. On the other hand, what is happening? Commodities which we have purchased are going out. So here we will mention, and only you as the owner of the business knows how much cost of those commodities were. Let it be mentioned over here. Cost of, okay, we can directly write cost is 10,000. Okay, we can write the same thing, and beside that let it be on left side. Now number 10, you have sold these commodities on credit, but again we will mention cost of $500. Okay, so here you people are getting the point that we are selling these commodities to get some profit. Total commodities you have purchased $10,000 and $500. The commodities costing $10,000 were sold for $25,000. Commodities costing $500, you have sold them for $1,000. Now we are going to record these transactions. It was number 9. So what we were saying, sold these commodities for cash. Cash is coming in for 25,000. And secondly, what happened? Goods, when you will sell these commodities, good will go out. The commodities which we have purchased after selling these commodities have gone out. It means here we have goods and these commodities of worth rupees 10,000. We will put sign of minus, they have gone out. This is your 9th transaction. But here, please note it down, the commodities cost was 10,000 and you have sold these commodities for 25,000. What does that mean? You have got a profit of 15,000. To whom this profit you will give? Again, when all expenses are beared by capital account, that means owner's account. So this profit is also the the this profit would also be gained by owner of the business or capital account. How much profit we are earning? Cost of 10,000 was, and you have sold these commodities for 25,000. So 15,000 is your profit, which would be given to owner of the business. 15,000 profit. Alright guys, so number 9 transaction gone, and now we will see number 10 transaction. Let's see what is happening. Sold commodities on credit. Again, this is entry for sale, but here cash is not coming in. You have sold these commodities 1000, let's mention, and the cost of these commodities were $500. Here we will come over here. Commodities of worth rupees 500 had gone, so you will put minus sign. In this entry you have seen that cash is not coming in, amount is receivable in the future, so that again is favorable. So you will be creating a receivable account, and here you will put how much amount you will receive in future, $1000. Put $1000 over here. Again, please understand, commodities of worth rupees 500, when you sold them for rupees 1000, what had happened? You have got a profit, and that profit would be distributed to the owner account or capital account. How much profit? $500 he had gained the profit. So guys, at this stage you can see that we simply introduced an accounting equation where we have learned how to record all of these transactions. Now finally, you will see that this separator, if it is equalized, when it is equal, we have bought any commodity on credit. Okay, this transaction number 4 was having two parts, and we have entered only single part, so let's add it as well. We have purchased business commodities on credit as well. So here 10,000 worth of commodities for cash, 500 worth of commodities on credit, but collectively what happened? Note it down. 10,000 were also commodities and 500 was also worth of commodities. So total, how much amount you have paid for commodities? 10,000 and 500. It means goods of worth rupees 10,500 had come. But out of this 10,000 you immediately paid, cash gone. 500 is still payable, which is unfavorable for you, and here you will introduce payables. How much amount is still payable? That is 500. So you will put 500. So here comes the twist. When you will be getting sum of all these columns, finally what will happen? Total of this side would automatically be equal to the sum of all columns present over here. Once again, I'm telling you what will happen. Total of right side, that means this is your separator. Total of right side would always be equal to total of left side. I'm sure that you people have understood. Let's check it out whether our transactions are okay. Here we will be calculating sum of all the columns present over here, and obviously these sums would be calculated individually. So first let's calculate sum of liability side column, and I'm selecting all the amounts. So here we have calculated its sum. Same step you will be doing for this and calculate sum of all the commodities. How you will calculate sum? Here you can see you may use calculator, or if you are making these transactions on Excel, please note this formula. First you will put is equal to, then SUM sum bracket start, choose how many amounts you want to get the sum of, and here you will simply get the sum. And now same procedure you will be doing for all the columns, and here you will get sum of all of these columns. Now there would be a final step, and here we will get sum of all these columns. Look, it was individual sum of D column, individual sum, individual sum, individual, individual, individual sum. Okay, and now we will be getting a grand total. Here we will get grand total of these columns, and here please understand. First was 1000, then you will add second column, then you will add this third column 4000, then you will add your next column 50,000, and after that last column 40260,830. So we have got a grand total which is 515830. In a similar way, we will take sum of two columns present over here. First this sum and sum of second column. Now you can see that 515830 present over here, 515830 present on the other hand. This way you have learned how to record transaction under accounting principles. This is extremely helpful for any business to know whether there is a transaction is accurately recorded or if there is any mistake. After recording all the transactions present over here, if your debit, if your left and right side are equalized, it means your transactions are correctly recorded. So here, my dear fellows, or dear guys, in this part we have learned how to record these transactions, but our promise or commitment was to know how much profit, look at here, how much profit we have earned. At this stage, no profit was calculated. Rather, we have just seen how to record the transactions, and these transactions we have recorded. In next part, what we will do? In next part, we will calculate profit of the business. It might be possible we are earning profit. It may be possible we are losing and facing loss. Just these 2 hours will change your life. This is your first part where you will always record your transaction according to principles I have just shared with you. In next part, you will learn how to calculate the profit. So I am requesting you to please start repeating the record of these transactions by yourself. You may record these transactions in Excel like what I have done, or you may choose a paper and record the transactions. And when you will see after completing all the transactions, if your sum of left side is equal to sum of right side, then you consider yourself as a successful learner, as a beginner. I am assuring you that after completing and equalizing both sides, you will never be able to confuse, to record, or to make accounts of your business, even if you do not have any degree. If you are not, if you haven't learned anything from any college or university, I am promising you, if you are successful in equalizing your transactions, it means you have made absolutely splendid accounts if they are equal. So a request is very humble. Just write down your transactions of the business, then record them, record all of those transactions in accounting equation, the rules I have told you. It's very simple. If something is coming in, just add. If something is going out, just subtract. Just like this, when you building, when you have purchased building, building increased, plus when you have paid cash, cash is going out, it means you will be subtracting it. So please practice this, the way of entering transaction in accounting equation according to your own schedule. We will be sharing second part of this lecture, with which you will understand how to calculate the profit. So it was all about first part. Thank you very much for your time. It's time to say goodbye. Allah Hafiz.